So one of the key issues to discuss in this chapter is how exactly are we going to avoid some of the cons, some of the downsides of these issues. And let me give you the answers. Now, these come from years of experience. They also come from speaking to leading technical analysts and leading traders. The first thing we're going to have to do is take the best of all three indicators. So, for instance, we're going to combine the MACD, the stochastic, and the RSI. We're also not just going to look at daily charts to look at where the momentum is coming on a day-to-day basis, but we're also going to have to look at weekly charts to see what the medium-term momentum is. Because if you've got a stock which seems to be falling on a daily chart, it might be that there's a big updraft on the weekly chart, and therefore you may not want to go short on this, or you might want to have a very tight stop loss, because at any moment you know it's going to get caught on this upward draft, and the daily will also start moving up, and that's what tends to happen. They tend to get caught on a weekly updraft. Think of it a bit like maybe the ocean coming this way towards the shore, and if this is the shore, but if the wind is blowing this way, you start getting drift that way, and that's how momentum actually ends up working. If this is land, and you've got waves upon waves with certain momentum coming this way, but you've got a bigger force that way, then you can imagine how it gets carried away. And that's how the daily and the weeklies interact. Why should the weekly charts be different to the dailies? Well, on a weekly basis, you might have longer term fund managers looking at things, people who take a different perspective, and on the daily, you've got people who are obviously more proactive. Now, of course, when the weekly and the dailies converge, so that on the weekly chart you've got something of a rise showing, and on the daily you've got a rise showing, what I tend to find is that's when the daily really kicks in and moves up heavily. So the weekly charts are something we're going to have to look at. We're also going to focus on divergences, which we saw in the last chapter, because they increase the probability that the market is, when we enter at, say, that point there, after a slight turn up, is going to continue upwards as opposed to petering out and going lower. We're going to look at money management. That means if we're right 7 times out of 10, we can still make money. And that's the important about money management. So these are the ways we're going to be avoiding all these downsides of the indicators that I've mentioned. And these are the things which, through professional aspects, help us win. But they're not all. There's risk management. We're going to focus on breakouts, price breakouts, when the price is maybe trading below a support level and then breaks above it. Those are high probability trades because we know what direction we're looking at upwards. We've seen some degree of breakout, so has everybody else, and more importantly, our stop loss can go just beneath the support level. When it does that, that's when we know that we've got a good risk management structure, because our reward might be, for instance, 2 and our risk is only 1, because we can put a tight stop loss in there. We're also going to look for corroboration, and by corroboration I mean we need to look at other indicators and other chart patterns as well. That's when we add weight to our probability that we're going to get a breakout to the upside, and that the price is going to continue upwards, and that momentum has found some strength. These things are critical. They're the things I've sifted through which will tell you, bottom line, these are the most important things which increase the odds moving in our favor, and we avoid the classic mistakes that other people do when they just read textbooks about momentum indicators, or non-traders make. So as we move forward, we'll look at these aspects in the forthcoming chapters, add them one onto the other until we're very good at interpreting charts with a good degree of success.